Good afternoon. Welcome to GrainTV. It's Monday, December 1st. Corn and beans found positive gains, although on choppy trade with a 1 cent and 2 cent advance on the day. But wheat, on the other hand, was definitely the big leader, advancing 29 cents. Cody, what's driving the wheat market today?
Well, first of all, Russia introduced some new regulations here, and basically what it's aimed at is improving the quality of the wheat that's exported out of the country. Basically, there was some concerns, and this is a policy that is now, I think, trying to combat this red-hot export pace that they're experiencing. Right now, they're running about 30% ahead of pace of what they've been at last year. So exports are going very strong. That has a lot to do with the fact that the ruble is very weak. You had a large harvest here during the summer. The bottom line here is that this is a policy to try and slow that by having to keep a closer watch on the wheat quality, the machinery quality, as well as the quality of the storage here. That's going to increase the cost here to export. It's probably going to slow grain movement. And I think this has the market really paying close attention to Russia's regulations here even going forward.
Right. And so, you know, we have this sort of indirect trade barrier, if you will. But Cody, do you think there's any possibility that Russia may get more direct in terms of imposing quotas or other types of direct trade restrictions down the road?
I don't necessarily think they're going to go with direct trade restrictions, but I do think that we could get more of these kind of trade barriers down the line if the pace of exports continues to be red hot. Mm-hmm. Right now, you know, they're a part of the World Trade Organization. They need to continue to sell to a lot of who they're selling to is political allies and people or countries that are going to be very important to Russia here. Bottom line, I think that it's mostly going to be trade barriers, but we're going to have to pay close attention to Russia and any sort of developments going forward here, because that will influence exports here in the U.S.
Right, and definitely, you know, when you bring this on top of the weather jitters that we've had in the last week in Ukraine and Russia, that got us a nice 29-cent pop today in the wheat market.
Absolutely. Now, we had export inspections, Kevin. If you take a look at those, I mean, what did we see and what does it mean?
You know, really, Cody, it was sort of another week of mixed results here. We had beans, although strong, still well below analyst expectations with 1.8 million metric tons of shipments. You know, that's still a large bean shipment, but again, it's not on par with what analysts were looking for. It's some signs that the bean export pace may be slowing down. Corn was up at the higher end of expectations, but certainly not eclipsing what the upper end was. And then wheat was again disappointing, coming in at only 273,000. So all in all, you know, export inspections are something we watch. They're not real market drivers because they're not forward-looking like export sales. But, you know, it is something that the market sort of digested a little bit today.
Absolutely. Well, guys, thanks a lot for joining us. If you have any questions, please give us a call. Number's 877-472-4607. And remember, you can take a demo at our Grain Hedge website. You can go up to the top right-hand corner, click on 14-day free trial, and see what it's like to have live mobile quotes right along with you when you're away from your trade desk. Thanks a lot for tuning in. We'll see you here tomorrow.